Hello, everybody. Charles Canna, Certified Financial Planner here for the Lifetime Income for You channel. You know, if you've been watching these videos, you know that over the past months, I have been saying there were going to be fewer rate cuts than what is being prognosticated by the market. We got to the first of 2024. The market prognosticated 5 rate cuts starting in March. Well, here we are in March, and interest rates are not going to likely be lowered this week by the Fed. We will then hear Chairman Powell speak on Friday. To this point, the market has powered through all of these little problems we've had. We did, over the last 6 weeks or 8 weeks, see inflation continue to rear its ugly head. And we've got kind of a chicken and the egg issue here, folks. Are we not cutting rates because inflation is too hot? Or is inflation coming back because rates are so high that it's pushing up prices? Especially, you can take a look at the housing market, at 6 and 6.5% mortgage rates. The cost of a new median-sized home in America is around $2,600 a month. 2 years ago, it was at $1,700 a month. That's all because of interest rates. Now, of course, if you got your house 5 years ago, you're not in those 6 and 6.5% rates, but you're certainly not changing homes now, right? And so that is what the Fed has to deal with. Is their high interest rates driving inflation now, or can the high interest rates help drive it down? And so hopefully they're going to speak to that a little bit. Overall, I feel like we still maybe will get 2 rate cuts, but not before Memorial Day. So look for that in June, perhaps July. If we get too far past Labor Day, they won't be able to add in a rate cut, because then no matter which side you are on politically, one side or the other will consider that to be gamesmanship before the presidential election. But like I said before, the good news is the market is powering through all of these things. One thing that we have available to us here at Wealth Watch Advisors is we have 2 new managed ETFs that work with Bitcoin. So for a lot of people, they like to have a little tiny bit of Bitcoin in your portfolio, and most economists believe that it's something that makes sense. Now, what are we talking about? 1 to 3%, right? Not 5, not 10, not 20, a very small percentage, so that if Bitcoin does make that rise to $1 million that some people say, you get a little bit of charge out of it in your portfolio. And if it and we've had at least 3 times over the last 6-7 years where Bitcoin has lost up to 80% of its value. Now, it's back up, it's at an all-time high, but it does go up and down, so it should be a small percentage of your portfolio. If that's something you would like to add to your portfolio, press the button below, get on our schedule, and let's talk about it. So remember, overall planning helps you stay invested when the markets are going up, down, and sideways, so that you can stay invested with confidence. Knowing that you don't have to take income from your stock market portfolio allows you to stay invested whether the market is up, down, or sideways. And that's important. Protect your portfolio. You work 35 years to amass it. At Cannon Financial Group, we understand how to protect your portfolio, how to get you the income you need, and then with the rest, the 10 years out and further money, let's invest it and get the best possible result for you, your family, and the legacy that you want to leave. This is Charles Cannon, Certified Financial Planner for the Lifetime Income for You channel. Remember, lifetime income is the most important part of your retirement portfolio. Have a great day now.